What about now? Is it, what's it sound like? Does anybody know? Because uh, did some rearranging, some moving to see if this will be better. Sounds fine. Okay, it's just me then. It's just me. Must be my audio. If it sounds the same as usual, then that's all I need to hear. Let's see how this internet does today. I'm gonna need the SEAL Team 6 of fucking internet fixers over here. See, this should be all set. Sweet. Okay. Good morning, guys. Hey, happy Monday. Welcome back. I hope everyone enjoyed their long weekend. Happy Easter. Happy Monday Easter. Happy Orthodox Easter. Who knows? Too many Easters. Too many. Okay. All kinds of stuff pre-market, huh? All kinds of shit. We should probably take a look at last on Thursday. Friday was off, right? Let's let's just take a look. I know Tesla's up 8%. GameStop's doing $1 billion offering. We'll talk about that. We'll talk about it. Okay, Thursday, an explosive day, all-time high, right? All-time high, and led by basically growth. So what did we do? Back over here, we wanted to get aggressive on growth for really the reason that equities are going to be risk on, right? There wasn't really something else other than equities are going to be risk on, which means that growth, which has been so far behind value, was going to need to catch up. And it was in a sort of a pivotal sort of week because we knew that growth was in a consolidation here, right? We knew that this was a consolidation. There was tightening. There's this big level of supply. We had a lot of volatility in this range before. And we even talked about it with the Hang Seng that this past week, we were going to need to see a breakout occur, or we're going to be entering, further and further into some sort of bearish market where growth is just is going to have a hard time, right? And so the bet was that, well, that's bogus. That's not going to happen. Equities are not going to go risk off. They're going to continue. And so we bet on all the growth along with our value play, and here we are. Now, Thursday really solidified a lot of this, right? There's a lot of different ways you can look at this. Obviously, I posted that Q's chart that Wednesday just to set up our idea, but I had posted a ton of tickers from that last weekend going into this week, just trying to find those individual plays, trying to get back into EVs, right? Getting into that, getting into ARC, talking about a flow into ARC, posting some of those charts. And then Friday, look at that candle. Thursday here. And then Wednesday was one thing, right? Wednesday was the breakout that we saw on all of those tickers, right? And we had this trend line on all of the growth tickers. But then that Thursday, that gap right there was all you needed to see. And it held in things like Google. I just posted the Google chart last night. Things like Google here, this candle on this madness over here, just disgusting, right? Google had basically transcended the rest of the mega caps back in the beginning of February, stayed in the value, held it. It was worrisome that it could come down, held it the whole time. That Thursday candle right there is just disturbing. That's it's not so much that it's just, it's a lot. That's a big move, right? That's really a big move. And so something like that is absolutely confirmation of the idea, let alone everyone that bet on it has fucking profited out of their mind, right? Because you just preempted a trade that technically you'd be waiting for this today, Monday. If this was under any other circumstance and we didn't preempt this trade, today would have been the day we would have started trading this. Not last Friday, not, well, 2 Fridays ago, right? And so that Thursday, listen, we left early. I think some of you, continue trading. If you didn't get involved, again, big learning opportunity to go back and figure out where in here, and then through the rest of this week, right? When we came into coming into this week here from Friday, Monday, and then somewhere in this sideways trading into Wednesday, where especially if you weren't able to get into Wednesday when the breakout really happened, right? That would have been like a intraday technical break that we would have saw and got in, and especially some of you that are a little bit more momentum chasing and you don't want to take as much risk. Find out what happened on that day there, and then going into Thursday that you weren't able to get this, because this should burn in your eyes now in hindsight, right? Now we can look at this and say, oh, well, duh. Now, hindsight capital say that. The thing is, though, is that we were really a part of that. And so that was an opportunity that needs to be taken. I would say that if I didn't do that, I would have been really upset with myself this week that I missed that, because I just want to make it clear. I had posted at least 100 charts from that last week. So going into that week, we had about 100 growth charts. If you couldn't find anything in there, then it's not cut out for you, right? That's just the reality. And so keep that in mind, because again, if you miss that, you're just never going to make it, right? It's just never going to happen, because it doesn't get more clear on the break side. This trade over here doesn't need to happen. I understand the risks involved here, but it's over here. This has to happen, because what's going to happen now is if you are trying to do something today. Now, yes, if this is going to happen on the NASDAQ, another 9% or something here, then yeah, there's plenty of money to be made here. We have years and years, right? 20 years from now, you can still make fucking money, right? That's not the point. It's every time you have an opportunity, you got to take the opportunities when you get them, right? It's not that you don't get many opportunities in the way that we trade, where we're not looking to make 12% a year. We want to make 100% in a fucking week. You want to make that gain here and actually get the money working. There's a lot of risk involved. It's in these pivotal moments here on breakouts that our risks are at their lowest and our rewards at its highest. And that's when we're going to get exposure to everything and really make you're solving a problem in real time and making a decision that's really hard to make. And what you're going to get in reward for that is something more than other people are going to get, right? It's very easy to this week. You're going to have people coming out this week saying, "Oh, look, Nasdaq's heading back up. Everything looks good. Oh, Tesla's up. Oh, look, it looks really good now over here. Yeah, like awesome, right? Okay, that's great for you guys. Now you're going to get involved. You're going to be a part of a move. It's this part of the move down here, and realizing that there's an opportunity here that even if it's not many percent on the options, it's everything, right? It's everything. And so we want to capture everything. And so just to put it on to last week, we've got it. The equities are risk on, guys. Equities are risk on. And so that's what we're doing, right? That's literally what we're doing. And so I hope everyone had a good weekend. Certainly had a good time. I certainly had a good time, sort of basking in the hard work pays off, right? Dollar doesn't matter. I want to remind everyone, it's not that it doesn't matter. It's not correlated to the market going up or down in that sense. If the dollar's going up, it doesn't mean the market's going down. It's really important to remember what exactly is going on in the economy, and it's the market's reaction to that. If we come over here and we load this up, yields continue to rise. If yields continue to rise, didn't the last time yields rise, tech was just doing terrible? It was falling every time it rose. The NASDAQ was getting pummeled, right? It kept getting absolutely destroyed over here. Then why is it now rising still with yields increasing? And if you remember, this day here, when this opened, yields were up as well. Because right now, that was happening. But it's not correlated. What's happened now, and a part of this bet here, was that we were going to create a baseline of understanding that, okay, the economy is going to get hot and yields are going to be up, and this is the reality now. And as soon as you digest that, you can move on and everyone can start being risky again and buying equities. That's where we are. So if the dollar rises, if yields rise, because no one wants fucking treasuries, everyone's going to be in here. And so the spending is going to, it's a bit of an illusion when you look at the dollar rising, because the money is still being printed. The Fed is still 120 billion a month. Biden spending trillions of dollars every fucking couple weeks now. That's inflation. And everything is going to appreciate. And the one thing that you're not going to see when you go fucking Google is that they're going to say, they're going to make this weird connotation that equities do not appreciate during inflation. That's absurd. If if things are inflating, then why would price not appreciate with that inflation? Do we not talk about a 2%? You have to calculate for the 2% appreciation that happens in price, right? Then why would we not be accumulating that inflation into our risk assets? It doesn't make any sense. And so there's still this backwards sort of, I don't know what it stems from, but it's incorrect. It is actually incorrect to say that equities are not going to be appreciating with inflation. Yes, it started with value, and that's because of a discounted future from growth because of the yields, not because of the inflation. The yields rose because of inflation expectations, but that does not mean that prices will not appreciate still. It has a short-term volatility effect. It doesn't have a long-term one. Yes, trends will change based on how much inflation, but again, keep in mind these macro ideas because it's really easy to get caught up in some of those ideas and then be like, well, I'm not really sure then. You know, for instance, the Dow, right? Is value now all of a sudden not good because growth is doing well? Of course not, right? Of course not. It doesn't make any sense to say that because growth is now doing well, value can't do well. Yeah, value is doing well without growth because of some short-term volatility ideas, but it's because of the same risk-on equities idea of inflation is good for equities. This just happened to be a better option because everybody knows that these sort of companies that don't really grow, they're going to grow because of inflation. They're not going to be earning any more money or doing anything different than usual. You know, the companies in the Dow aren't doing anything different. They're going to be doing the same thing. But what's going to change? The amount of money that's going to be spent on them is going to change. They do nothing different, but they're going to earn more. That's all that fucking matters, fundamental or not. Technical, it's going to show that. And this is not a move for right now. This is a move in the future, just like this NASDAQ move here is not a move for the now. Nothing changed. It's based on a future expectation. So keep that in mind because as we see price change here, it's really important to remember that that can change and that prices can start to change in a short-term sense because of things happening now. A lot of this was happening for future pricing, not for the pricing of right now because inflation has no sort of account on the current price. Nothing's happening now. It's going to happen in the future, right? So keep that in mind because it's really easy to look at some of these things and then sort of make a story. Like the best example is Tesla, right? And let's talk about it a little bit. Tesla, 185,000 vehicles in the first quarter, right? Fucking big numbers. EVs are going to be off the fucking chart. Thank God we got into some of these positions because, again, a nightmare. How do you get into this 7.5% up here? And the options are all screwed up now, right? The options are going to be all screwed up because Tesla options are the dumbest thing in the world because everyone buys out of the money, the deepest out of the money. And so new calls have to get written every time. So 185,000. I mean, is this a current price? No, it's based on a future price, right? It's a future value being associated with whether you want to call it. The cap size is definitely not the way to do it. No one's talking about what the you can try to associate the number of shares out there and then try to put the price to make a market cap. People are not betting on a market cap idea here. The problem here, this is part of the macro idea of what I'm talking about, is that this current valuation here of saying that Tesla, Apple's a $2 trillion company. Tesla's about to be a $1 trillion company if this continues here. It's really important to remember that it's like a brand name. It's like buying fucking Yeezys, right? It's not that there's a real value there. And so it's very sensitive. And so we're going to have more and more short-term volatility. And so even though these long-term macro ideas are true, I expect with this next breakout, a lot of the same things that have been occurring over here, which is this violent price action. I've talked about it a lot. It's going to be, it's not easy, and it's so much easier to trade with shares. That's the reality. This over here is going to be so much easier to trade with shares because options, we're going to have to be sensitive and take the gains when we can get them, and we're going to have to transition a lot quicker. I understand that a lot of these moves uh could be something like this, but a lot of the problem here, let me do it with like the path tool. A lot of the problem here is that when we're trading options, yes, this might be occurring, but this can also occur, right? You know what you can't do with options is hold through this whole thing. You can't hold through whatever this is, and you don't know if this is going to be this. And so, yes, it can be having a direction, but again, we're betting on speed with options. And right now, the more I looked at so many charts this weekend and looked at so many option chains, the more and more we get into this idea that we're breaking out, the more sensitive it is. And again, that anxiety. Remember, we've been at all-time high, and think of how anxious we've all been and how anxious the market's been of any time the market is not going to the upside and not moving quickly. If it's not 10% on a ticker, it's nothing, right? It's like the Ricky Bobby bullshit. If you're not first, you're last, right? That's literally what the market's doing right now. And so you got to remember that on options, that anxiety is amplified. And so I want us to be really careful because we put a lot of bets on, and we have a ton of exposure, but that risk is not just price risk. It's that speed risk, and it's the risk of an anxiety that people have and we all share, in that it can happen in an instant. Price can be going up, but your options are going down, just like price can be going down, but your options are going up. Why? Because people are betting that it's going to go up, and they're going to be able to capture it with the option, just like we did over here. We were buying on the way down, right? You got to remember that over here, that when we're all-time highs, it's very easy to not have resistance or supply, and price can keep moving. But our exposure on the risk side grows. It grows because our reward is growing. And so it's important to remember that, because your percent might be larger on the profit side, but while that goes up, so is your risk because of that. Because now people have money in their hand that they didn't have before. And you know what happens? Even though they didn't have it the day before, now all of a sudden they have something on paper, and now they have more risk than they had. And they are afraid of losing it. People are afraid of losing this. It's really important to remember that on the growth side, there's a lot of whiny fucking bitches. And we're all pussies on the growth side. Value, we can be real men and women, being strong, holding arms, just trending, having a good time. Over here, we are pussies. We cannot hold things. We break down. We start crying. We fucking call our mom. This shit over here, it's the same thing, guys. It's going to trend up. But guess what? We are terrible. We are bad traders. The market's a bad trader. This is terrible. Look at this volatility. You know what? It's not calculated in here, that's for sure. It's not in here, so you're not going to get saved by the VIX going up and telling you, oh, there's risk coming. There's risk coming. You got to watch out. Nope. This thing is going to zero. It doesn't matter. So keep that in mind. That's something I want to keep in mind this week, because I want you to remember what it feels like when you're going through all-time high and then you lose 0.5% and the world is ending. Your whole world got turned upside down, even though you're at all-time high, but you lost a percent on your ticker. You just lost 1%, and maybe you just got your whole legs cut off and you're fucking crying in the corner saying, damn, I really wish I took profit. You don't get to know. That's hindsight. You don't get to know. So you have to know now and plan now. Push your winnings. Do not lose it. No one's going to make fun of you for taking profit or be critical. But you got to be able to push the winnings here. But you need to know, as you push those winnings, your risk is going up. And that's what this week's all about. That's what we're going to talk about a lot. Now, I post a lot of tickers. The one thing I want to remind everyone is that it's not so much that you need to, it's not that you have to trade the tickers or anything like that I post. Obviously, we all choose to trade what we want, and some of you like the charts. It's the repetition. You have to remember that you're looking at prices every day. A lot of them are similar, and it's all based on the same thing of supply and demand, which means they're all connected. Whether they look connected or not, they really are connected. The money's connected. It's the repetition of seeing these moves that's the most important. That's literally the only important thing that comes from looking at this every single day, is it's going to get just ingrained into your brain, and you're going to see it every single time. When we look at this list I just posted from this weekend, it's not that I'm going to trade every single one of these breakout ideas. This is a long-term one. GRBK is a long-term one. Keep that in mind for home builders because individual tickers, obviously, we like to trade actively. So over ETFs, especially for long-term. Keep that in mind. But so it's not that I'm going to trade all these, but it's about seeing every single one of these ideas and understanding the move in between supply and the support and resistance, and understanding how that is going to affect based on other tickers, other sectors, indices, right? And it's just doing this every time. And again, you don't have to go look for them. If you're looking at the charts, I have plenty of charts. If you're trying to go find your own, that's fine. You want to use the ideas, but again, it's just seeing this shit and being, oh, okay, so there is something here, and I understand the consolidation, so that when it's happening in the moment, you can make a better decision and say, I know what I'm doing. That confidence where you say, okay, I know it. Because if you don't, and this is a blank fucking page here, and you don't see it, you're not going to have the confidence to hit that fucking buy button. Because if you don't see it, you're not going to hit the buy button. That's the reality. And so, I just talked about all those macro things. All of those ideas is to give you confidence that you know what the fuck you're doing. If you don't have the confidence that you know what's actually happening in front of you, if we don't really know what price is doing here, we can't make a trade. Is this correct? It's not that it's correct or the exact. It's that it's the repetition in the pattern in which we see it that we can say, okay, this happens, and I know this happened before, and I can say confidently that, okay, this is how prices moved, and this is how the market's reacted. I'm going to react to this move. And I know what the fuck's happening. Otherwise, it's just, we're in the middle of nowhere, right? We're sort of guessing a little bit and trying to figure things out. We don't really know where we're taking profit. We just kind of go with it. We don't know where our breakdown level is. We don't know where support it. That's the whole point, is just the repetition, build the confidence. Some of you really need to, you guys want to be serious, but you don't fucking take any time to go look at any of this shit. It doesn't bother me any, because those of us that do are going to make the money. You can just sit here and dick around. That's not a big deal. And if you don't have time, it doesn't matter anyway. But those of you that are actually serious and then you keep making excuses of why you're not doing well, it's because of you. You're not fucking doing the work. You know how many fucking hours I took this weekend doing this shit here? You know how long it takes? Do you have any clue how long it takes, right? You guys know the work it takes. If you're not willing to do it, you're not going to make the fucking money, because it's the confidence. And I can repeat every single one of these levels off the top of my head because I fucking also write it down. I write it down, copy it, and it's ingrained into my brain. I can see it, right? You got to see it, and it's not just it's there, it's you believe in it, right? You have to truly believe in those levels, and if you don't, then don't trade it, right? That's the important part, is if you don't have that confidence, you can't make that trade, because you're literally just gonna fumble it, right? You're just gonna completely fuck it up. That's it. That's the rant. How much time we got? We got 3 minutes. 3 minutes. LSU says good luck. We don't need luck. We don't need luck. McKeezus is out on the golf course, it looks. That looks beautiful. He's lucky. So he's lucky. He needs luck in hope, because his positions are... He's probably in Tesla, so he's banking on the fact he can go golfing. Okay. Do we have anything else? I didn't think so. I mean, the numbers are just really out there. What was GME at right now? Curious. Minus 13? That's nothing. That's nothing. 166? That's nothing. I mean, they only did the $1 billion that they had anyways. I mean, that it's only $4 billion that they have for cap size. So, I mean, I guess technically that's quite a bit. But it shouldn't really matter. It was already priced, I'd have to imagine. I'd have to imagine. I mean, I have it on the other. You'll have to look on the chart. The levels are no different. It's at all time. Excuse me, it's not all time, but it's at the high. So the next level is up here. Next level is up here. So you have the support that we were looking at through here, right? But it's all, again, it's all upside move. It's all trend. It's more of a, if it starts to reverse, then that's, you have to get out of it. But there isn't really a true level here other than going to the next level. Like, for instance, when you look at BA and shit like this, right? Your support's all the way down here. You're in the middle of nowhere, which allows for a lot of volatility. So keep that in mind, right? I would just say trend lines, right? Especially anything all-time high. Remember, guys, there is no level. There isn't a level. It's all trend line oriented, in all creating new levels. We're literally just creating new levels every day, right? So keep that in mind for sure. Good question. And so yeah, especially DFEN, that you gotta be, what I just talked about being sensitive, that's a leverage, right? If you're using that, then there's gonna be a really good reason. I would just trade, again, guys, always trade the specific tickers themselves. Well, I use the leverage things like DFEN or UDAO or QLD, these different things that are leveraged ETFs for more risk exposure. When I say, okay, I know these next 3 days, I'm going to be able to get a directional and a speed gainer here, right? Yeah, the EVs and everything, guys, is great. Great move. Again, it was really easy to, here's the thing to remember, right? I talked about how bearish ARK and everything was, right? In a lot of the problems there, it's important to remember to get out of that bias, because as soon as we saw it, we have to take advantage of it, right? We're betting on those ARK tickers, things like Tesla, right? Then we're betting on, again, we're betting on those EVs and things that we were trading before. Those intermediaries. Ryan mentions Blink. We made the big plug trade, Blink trade, Tesla trade. Talked about Neo, how there was some problems over there, but again, we're still bullish on China, right? We preempted China like a week early, and we got stopped out a few times, but it's still, that's a sector we're bullish on, just like we're bullish on clean energy, semiconductors with that, right? We're going bid still. I mean, we're opened up almost 1% higher. We're still bid. Still bid. See, this is, again, what's happening. So here, the Dow is still leading here, which is hilarious. It's actually hilarious. The Dow is still leading through the high, which is where you do not remove those value positions until there's a fucking reversal. This is so many points in relation to the tech. It's just not even close. It's not even close. And again, yields, I mean, I know I just made the whole spiel about yields being up doesn't affect it, but it does have a discounted effect if there's more, right? Again, the spending does have an effect. Does have an effect. Value side is looking good. Um, okay, I know there's probably something that should be addressed here, is that a lot of you are probably just fully positioned, and so it's like, well, I don't even have, I mean, we actually joke about this a lot, but it's like, hey man, I don't even have any more cash to buy anything. When these things start to happen, some of you may not have been really trading too much. What, like during what time? Like I would say like during, think of like last summer where we were really risk on, and it was like you could quite literally buy anything, and there was, you just buy anything as we went into all-time high. Try to remember to that time, or in the past before that, if you guys were also trading, of when we push through all-time high, how there's this sort of inclination that you can buy anything. During that moment, what you want to be doing, of course, is there's risk involved to exit a position. But if there is something better, it's going to take you 5 seconds to take profit on your position and go enter another one. Maybe more than 5 seconds, but you know what I mean. Don't let opportunity costs just sort of go to the side. Don't be happy with what you've got if there's a lot more out there and you know it, again, it's if you know it. If you know you can exit a position, to take another one, right? It's only in that moment, but that's worth it. It's worth it. And sometimes you do it again because of transition ideas, because you want to take profit and there's risk involved at the next level. You had a rejection. And so as you come into resistance, turn that into a new support buy or a new resistance breakout buy, right? There should be some sort of flow to it. Not always going to be perfect. Yeah, guys are mentioned travel. Travel still going, right? Still going. JJR mentioned save. Okay, I mean, we talked about this move here and how I even talked about it. I had very bad entries. Very bad entries, but I also talked about how we were holding these positions, right? This trade over here, again, hindsight capital. I talked about it, how hindsight capital, if you guys, there's a clip of it. I said, you know what hindsight capital is going to do? They're going to say, well, I held through this whole thing because remember I said price is going to be up here. Price is going to be well over here on travel because travel's so volatile. Price is going to be way up here and hindsight capital is going to go, duh, of course I bought down in here and held it through, right? If this does continue to break through the high and stuff, remember that this here is fucking difficult. There's no timing this perfectly, and holding through this is hard, but you have to do it. You have to do it, especially when you look at things like AAL, things like that. We know there's a trend line in here. Keep that in mind. Now, I talked about AAL is a little easier because these candles here are very traditional, and the breakout into the two is very traditional to see and hold through. But again, like I said, hindsight capital is going to be like, well, duh. Okay, well then why are you fucking buying right now then? What are you buying for right now if you're already in the position? Look at this chart, guys. Look at where we are. Uh, yikes. You have to love it. Remember, bank up a nice supply. Those of you that are all, you guys don't have a good time when the market's going down, bank up a nice supply of happiness right now for when this comes back. Okay? I want you to start banking it up right now. I want you guys to have a surplus of happiness for when shit sucks. And that usually means make your fucking money now if you're a long trader, right? If you only trade bullish, you make your fucking gains now so that when shit sucks, you don't have to be upset. You can go dick around and do whatever the fuck you want. We're waiting. NCLH has the highest gain on the cruise lines. Cute. Free Willy, disgusting upside breakout. I talked about Free Willy back over here. I know it's hard for me to talk about it without it being a meme, but I think some of you obviously know it's not it's not a meme, but it's really hard to. This is a great breakout. This is a great breakout. I would probably give it more of like an ascending continuation triangle here is what I would do, but I think I'm more already on the upside breakout territory to where it is, but definitely looks very good. Aerospace and defense. Wiz mentioned DFEN. That's tough over here to hold through this. The individual companies are pretty easy. That's a hard trade there. SPR, for instance. Semi's looking very good. So obviously we got a big breakout with semiconductors. We got really involved with it when, again, it was one of the first sectors we got into on this preemptive trade. We had to make the trade a few times. But again, we saw this move on all the charts, right? Semiconductors doing very well. I talked about the AMD trade. Listen, AMD still sucks, but we took this trade down here. It's again, we got this move and now you're safe. I'm willing to let this come all the way back down to risk to have this go back to the high. I will risk all of this gain here for it to go to the high because it's been so beat up. It's been so beat up that I think it'll be worth it if that's going to happen. It just like, there's too much. Let's see. Can we get some volatility? I think we're going to get some volatility here. 9:38, 8 minutes. Hey guys, I have you guys on. Free Willy, holy consolidation. Wow, exactly. I have my screens fucked up. You guys are like on. I'm not even sure, but whatever. I switched up things today. Um, X is still going. Those of you that don't know, DMX is having an overdose. So one of our favorite X memes is X gonna give it to you. And if X can't give it to us because he's in a coma, is X still gonna give it to us? And apparently he is. So thank you, DMX. Very thank you. Great. Because again, you just never you get no clue. Again, this is all that in the infrastructure bill. Really important to remember that. It's really important to remember that this was priced a long fucking time ago. This again, guys, this here is just those traders that are really slow and started reacting to the infrastructure bill over here. This is all price speculation because of spending. We know the government's going to be spending, or at least we have an expectation. And I talked about it all last year, how I expect the government to spend endlessly, to not care about inflation. And then Powell came out and said it, and I literally died for days because he said exactly what I thought he was going to say a year before or a year after I said it. They're not going to care about inflation anymore. You gotta love it. Just spend that money. Give out more Biden bucks. Google is just fucking it. Absolutely insane. I mean, that's just insane. Okay. Wow. Look at that. That's quite the number. Oh, God. Help us. Help us. Oh. I don't even know what to say, boys. Good job. Good job. F resistance 12 and a half. Yeah, it's at 12. I've had this 1246 for a while. It's just an average of 12 and a half, and below that was the other one. 1243 or something like that. There is a level here for sure. Again, it's it's really easy to, if you remember, we were classifying this move here is because Ford went EV, and so we started classifying Ford and GM as EV, the EV sector. It's important to remember that there is some sort of pricing happening because of EVs, right? And so we priced Ford with EVs, so did GM. But it's really easy to look over here and be like, well, this isn't as much as Tesla. Well, because Tesla's kind of stealing the demand. It is just fucking better, right? On the EV side, they're years and years ahead. They're never, no one's gonna catch up. That's the whole point. Ford can make 10 times as many vehicles as Tesla in a year, easily. Can make 10 times as many, but is it better? No, it's just not better. Even if they might make more, they may make more money. Ford might make more money. Tesla makes barely any money. They barely break even. And so this price being held here is really showing the technical, the resistance here, because it's not breaking through here. It hasn't broken through. This trade, you wait for it to break this level. I think I talked about it back over here because we wanted to take some of these trades. We were trading it back over here. This over here, And it's a good thing you brought it up, Ryan, because we can't take that trade until it breaks above there. But you got to think about this. You want that trade over this here. We trade the leader. We trade the leader in price. Remember, it's not the leader as a company or something. It's the leader as in price. This is leading price. This is leading price out of the low. Ford was already at a high, I understand. But we don't care about the move before other than to understand the levels. We care about the move in the now because it could be coming from fucking zero. It doesn't matter. If the move is coming, then we want to be a part of it. That's an important thing to bring up because this is not doing anything yet. It's holding. Nothing yet. Hey guys, wow. Hey, wow. Kind of weird how this is just trending up through here after it lost 20%. Really strange. Really makes you think why Rad would be just coming right out for no reason. I mean, it must be a gap fill, right? It's got to be because it's filling the gap, right? Duh. Must be that. Could be a gap. That makes more. Don't look at those contracts. Don't look at those contracts. You guys were upset about the WBA contracts. Don't look at those ones. Meanwhile, WBA is continuing as well. Look at this chart, by the way. What is that? What is that? What is that chart? It's so funny because I have my trend lines and everything on the other layout. Again, I'm using a new layout because it's faster. When you look at it like this, if you think about it and you take off like your pattern recognition and you just look at it, you'd be like, what is this? Is the most manipulated fucking ticker you'll ever see in like a recent time. Look at this price action. This is so manipulated. And it's just all options. This is all market makers taking off positions, market makers putting on positions, taking off, putting on, taking off, putting on, taking off, putting on, taking off. There's like 4 people trading the actual shares, and then it's all market makers trading the fucking underlying to match the goddamn contracts. Rad, what do you think's happening over here? Is this people that they're long and now they're not long, now they're long, now they're not long, now they're long, now they're not? Or is it just the fucking options, right? Again, it's so easy if you don't know that's a real thing, right? If you don't actually understand how the market makers work, and then you think market makers are trying to fuck you or something. No, they're literally just they're writing you your dumbass fucking out of the money call options. And they have to go hedge against you, dumbasses, because you're buying dumb shit with huge exposure. Exposure that's just insane. Just insane exposure, right? It's like GME. Look at this shit. It's not even moving because there's so much exposure. There's just so much exposure over here. You can't even get out of this. As a market maker, all of those calls out there, people are buying 800 calls, right? It's not that they need to be hedged against those, but it's all of the other calls. There's just so much exposure. Again, the bets on these tickers, and the reason we call it the meme economy, the bets, the options, right? The options market for these individual tickers in the meme economy are hundreds of times larger than the underlying actual value. Market cap on GME right now is 12 billion. Easily 30, 40 billion worth of active contracts right now, not to mention the exposure that brings, right? The exposure that brings is at least 10 times the value here, right? And that's the same with all of them, right? TLTR, I know a lot of you were like, wow, Don posted this chart over here. This is really, really nice levels, I think, when you look at these charts. Again, there's so much to learn from these charts, guys. Not because I'm saying like, wow, look what I did. No, we learn from the market. I'm just showing you what the fucking price is showing all of us, right? When you look at this here and realize that it's really hard to find opportunity. But when you look at over here and look at what I've sort of shown, again, price is just teaching us. Market's our teacher. I'm just quite literally just showing you what the market's doing here. Anyone can see it. It's really important to be able to see how you're trading through levels here and how this is such a technical trade and has nothing to do with the bullshit that's usually been talked about this. And that's where we can trade things that are a little bit more of a meme and WSB flavor, because we're literally just trading their fears, their emotions, the tightening of trading that happens, and understanding that people are willing to hold for a lot, and then they start to sell and buy really quick and tightening over here in this consolidation because they're worried now all of a sudden. But then as soon as that goes away and there's like that gasp for a new trend, that it gets, again, it's so easy to see afterwards. But again, that's what we're trying to bet on. So that's a good mention here, because this is going to be a funky one. I would expect that once it clears these levels, you get a lot of volatility. Something like this here, right? That's a 25% candle over there back beginning of the year. I would expect something like that here. On something like PLTR, same with some of our other more WSB sort of tickers. You got to keep that in mind. There's so much volatility on these tickers. Things like VRM, right? This chart here, I didn't see anyone mention this morning. This is one of those ones that is so easy for you guys. It's cheap, and it's such an easy trade here. Like if you don't have that trade in there, I don't know. Like it's an easy trade. No trade is easy, but you know what I mean. It's a decision of yes or no. Am I above support? Okay. This is now support. Okay, I'm above. Is price going up? Oh yeah, it's going up here. Yeah. Okay. Right. Something like this. And again, this is you don't have to take it. I'm just saying there's things like this from the most recent charts, right? And I've talked about it a lot. Most recent charts are very bullish in the sense that they continue the breakout. Facebook continues, obviously our first growth ticker that we get involved with. I mean, obviously ironic that I shit on Facebook for so long and then we took the trade, but that's still it's really important to remember. This is still, we took the trade right over here, transitioned, took the trade again when we were buying everything over here, right? It doesn't matter that it was a low or not. We didn't perfectly take it. Doesn't matter. This is still leading the rest. This is still leading. And now again, it's just getting into all-time high today, right? Getting into all-time high today. So it's going to get more momentum. It's not as high up as Google is compared to the high, but this in the most recent trend is leading the trend. It's important to remember that. The most hated company in America is leading this new trend, right? Keep that in mind. Keep that in mind. ZS, I like this chart a lot. There's a lot of ways you guys can play this one, I would say. We should be a little bit more individualistic with tickers because that's what really matters, but kind of hard to. Okay. Okay. I mean, what would be the way we describe today so far? The continuation of last week. We're continuing the move from last week. I would point out that some of the value tickers are really, especially travel, right? The more volatile part of the value side is doing very well. So I know you guys mentioned this morning, but this is a continuation of those ideas. A lot of it having to do with the economy getting back open. What this tells us, what I would say, what this would tell us, is that it's not so much that, oh, well, you missed it. No, because everyone was already buying a lot of the value ideas anyway. A lot of this tells us that there's a lot more room a lot more room to grow past the retracement level. First of all, this has a long way to go back to its February high of back here, right? 2020. This is about 55%. About 55% to that level. Some of you have not ever gained 55% here. But if you bought anywhere over here, if you bought this low over here, or anywhere in here when we were looking for it, that would be, okay, about 83% on the underlying. You know what you have to do for that? You just have to be able to hold it up there. You could have traded it from over here and you're still on the trajectory, but we trade a little bit more short term, right? But you can long term it. And I talked about all the long terms that are possible from this low. Think about it. There's long positions that get entered right over here when we took that trade for the first time. And they're going to trade it right up to the retracement. That's 200%. You bought shares down here, you would gain 200%, guys. That's the easier trade where it's going to take time, but you're going to make the whole 200% to retrace. Only if you know you can make more than 200% in a shorter amount of time by trading options should you be trading options. Otherwise, why don't you just buy from the low? Are you going to say that none of these were going to come back, right? And you could have just got these shares for 200%. If you guys are trading something like CCL here and you do not make 200%, then you should stop trading options. If you're not able to make 200% through anywhere in here and then up to that level, then you should have bought shares. What was the point of buying options and wasting time? You could have bought shares at any point, right? That's something that I always think about. If I go, wow, I could have just bought shares and been safe. I could have gone to the beach. I could have left. Could have gone outside. Just stopped working so damn much. Put it in the Vanguard. Oh, all over the place. All over the place this morning. Looking for that upside. I want this thing to come into this trend line. That's what I want. Do you have anything to add? I mean, that's where we're, okay. Where are we on big profits? Hard to say. I talked about this from last week, coming into this day, that it's more likely that you continue. You don't get, it's not like you need take profits. You're no longer in a consolidation. You don't need to get take profits on these big buy days. We're not going to try to time when it happens. We'll just see when it happens. But I mean, look at where we fucking are. We are, this is a rocket. An absolute rocket. A lot. Here, give me one moment, guys. More coffee. Okay, red is definitely getting it. And keep this. For those of you that are in these options as well, we have 9 days till expiration. Is today? Hmm. If we get up to here, so like another 6 or 7%, I will probably take profit on that for April monthlies. That's so many points in a quick amount of time, and you would have to, again, since you're coming into the expiration, you would have to gain a significant amount of points in those last few days to outweigh the cost of holding it, right? So again, those of you that are making risky short-term plays as well, if it's not increasing at a very rapid pace, so this would need to continue tomorrow, or else you're going to lose all the value. I'm not going to lose it. I'm going to take it. So again, those of you in really risky options positions that expire quickly or soon, if you get a big move, you're going to need to continue that, or else you're going to be losing points, right? There's no point of pushing it that soon into it. That's why we usually trade longer dated options, so that you're not losing on that tail end based on the price not continuing. That way you can hold through, ups and downs. For risky plays, we bet on direction. We got the direction. We're going to take it. So depending on how this goes. Now, if it stopped right here and this was all we got today, then I would keep pushing it because it's not too much to ask for it to continue. If it makes it all in one swoop, get some big candle here, then I'm out of there. Taking that profit, that's plenty of points. And there's too much risk involved, right? It's not that there's a fucking week until it expires, right? It's not like there's 2 months left on the contract and there's time to push that winning. There's nothing else to push. The contract's over. Exponential decay right there. Big travel day. Dirty Dow 1%, S&P 1%, small caps. 0.25%. Getting stuck on resistance here. This chart's an upside breakout territory. Qs almost 2. Facebook 2.5. Google 2.5. Big fucking numbers today. Gotta love it. My trading view is bugged. It is bugged. Yeah, it's a little bugged. All right. See what we get for intraday movement here coming past 10 o'clock. It's a little easier to look at. Definitely getting some more volatility coming in now. My phone is like actively deleting people's contacts. What the hell's going on here? All I see is people's numbers. Who are you? Oh no. That's rough. Volatility. Give us some volatility. What is going on here? Why is this? It's obviously not down 69 basis points. It's up 2%. Trading view. Hello? Trading view. Is this a 69 joke? Is this a 69 joke? The fuck? Nothing's updated. Thing? Color coming down. Half a percent. Money coming in, going out. Okay. What do we want to do with this move here? Hmm. Sell at the low? For travel, I want to see it go past the high here. That's what I would say. I would say the buying is not doesn't mean anything if we don't continue the trend up to the upside. So, uh, if we come down, take profit from this tomorrow or something this week, that's fine. That's completely fine to keep for risk reason to keep pushing it to the high because what you're trying to do here is get this trade from somewhere in this low, and whether this comes down into here, what you're trying to do is get it past that high because you get it past this high. That's when things actually can move. Or at the very least, you trade it up to that before the rejection, and then another whatever's going to happen thereafter. You don't know, and you can re-enter if need be. But any type of move in here, I would say 2 days. 2 days of take profit, as long as it's above. I don't know if I want to say the low or not, but as long as it's not losing too much value in here, not all the way down here, but it's possible. Possible. At least more of a timing thing. I'd be willing to lose a day or two to go test that high up here because this gain here would be worth that downtime. That's what I would say. Up to the high on any of the travel charts. And then when we get up there, we can decide and see what the break looks like. If it's a breakout, then again, there's a ton of points. So whether it's this entry here that's going to lead us to the next high, like this move here, if this entry here is going to be the one that leads us up here, then we'll keep pushing it. If not, then we'll take profit on the high here and re-enter that position for the next opportunity to trade it up to this next level, right? So it's either this one or the next one or the one after that. One of them is going to do it, right? We don't get to know which one. This one wasn't the one. Is this the next? Is this going to be the one that retraces? We just don't know. And so we'll keep playing it accordingly, but we're going to have to give it the chance, right? Because if we just exit it, if we exit those positions for the short-term profit now, while there's still opportunity for it to go farther, then we're actually hurting ourselves. We're actually losing money. And so be willing to lose a little bit, take a little bit of profit for a transition, wait for the next opportunity if this is not the move to the upside. Small caps keep coming down, so we're not getting the same move on the small cap side still. Which we had an expectation for. Now, not to say that this is not up. It's still up. It opened just as high as everything else. Just not the same type of move. It does have some resistance, but it is important to note that we did start to change our tone from the idea of value, moving from small cap value into large cap value when we made the Dow play back over here, right? That is something where the market is aware of. A lot of it to do with this whole move here made up a lot of the price move that was retracing in further expectations of further pricing. This over here, we're still getting a lot of that same vibe. Not to say that it's not trending up, but the large cap are still doing better. They're still doing better in the most recent term, while small caps are doing better in this term. So that's something that still exists. So still taking the large cap trades, which are easier to fill on, more liquidity to begin with, and so still keeping that angle in place. intermediary side on EVs is not looking as good as the rest of growth. Is that? Healthcare is holding. We have a lot around the break-even side. I mean, there is a lot of tickers that have none. They're just at break-even. In terms of flows, that would be because most liquidity and most demand is going to the mega caps, right? All the mega caps and then some of the bigger demand moves. So which of them is going to move would be a question. So, I mean, this type of stuff is sucking up a lot of demand. So some things are just completely break even and haven't moved. And this would explain it. A lot of the growth demand. And why small caps would be down, because they do not have the same market makers are not on small caps like they are in mega caps. And so the supply side, all of those trades that would usually be there are getting sucked up by something else, which means they're just more sellers. Right? We have a pretty good, everything is pretty well connected today, I would say. As EA move continues, that's been a pretty nice trend. There's not really many questions to be answered in here. We're coming up to the resistance. We'll see what that looks like. Something like that. I'm probably, this is certainly a transition. Not a problem. Probably this is 100% a transition point. Take the profit. not when it's already coming down. When you get close to the fucking resistance, you take the profit, right? And then we'll look for the transition trade to enter it, right? Doesn't need to be. Oh, there it goes. It's going down for sure now. No, we'll take profit because we expect for it to be held there and re-enter. Who cares? I'm gonna take my money home. The Twitter move, obviously didn't come through here, but it did bounce on the support, and more importantly, is the trend line in here. This is hard to see on the intraday chart. Let me show you. This is hard to see on this here. It's, you know, it's getting some demand taken by Facebook. That's for sure. I mean, look at what's the snap chart. I haven't looked at the snap. Snap look just, yeah, they're doing the same thing. Facebook is kind of being a bully right now. But it doesn't mean that that's not good for this. I would say that Facebook doing well is good for Twitter and Snap, right? That's the reality. And so this trade here, again, I mean, this is not really the kind of trade that I like to take, where it's, if I'm saying that this is a trend line, then I'm not going to cuck myself onto the trend line from the support. So I want trend line support. Or this is by the end of the day. By the end of the day, you get tightened and get out of the trend line. I'll take a trend line break if it's going to catch up to Facebook. And Twitter will make a bigger move than Facebook anyway, smaller. So we'll see. Maybe if this is I mean, there's a ton of points. If this stops for a moment during lunch or something, takes a little bit of profit from the top, maybe you see that demand come back through here, right? We'll see what that looks like. Still want to get involved, right? I mean, these are very clear. It's very clear to see where your opportunity is. Red now it's 6%. Put another 2% on in the last 15 minutes. It's gonna be interesting to look at those options on Google tonight. Yeah, we're getting it. We're getting it. We're continuing. We don't really have any decisions were already made. Now we're just here. We're involved. How's everyone doing? Things are trending up, continuing. There's not much to. We're just gonna keep watching and seeing how the speed continues, the velocity continues in that direction. Everyone have a good weekend. Good trades. Pepsi, Pepsi, Pepsi. Looks like we're probably gonna get the 130 on EMUS today. We'll see what this reaction is here. Obviously, want to trade it beyond that. Probably be willing to let it come down to 127 or something like that. Worst case scenario. The next move to the upside. Fine. These are all. This is one of those lower volume plays. The BOTZ ETF for robotics and artificial intelligence. Very ARC-like, but low volume. And so again, there's opportunities on lower volume where if you capture this in the right way, right, which is you track a breakout and you get that as soon as you know you're taking it, right? Again, having this knowledge that there's gonna be a breakout here for low volume plays is so important because when it's low volume, you have to preempt. You can't make it during it because there's not enough volume to actually make that trade work. It's just not possible. It's just not enough volume. And so this is pretty good confirmation, I would say. Breaking out a little bit quicker, but a little fast. A little fast, but we like it fast around here. RXT continuing the move here from yesterday. I like this chart a lot. We have converging supply levels here. That's a yes or no trade there. Hey, am I breaking through? Oh, I am? Okay, great. Here's your whole price action. There's nothing else to know. That was it. Was it? It was the only supply you had. Now you've got these two high wicks up at 25.75 or something like that. Hard to look on this 5 minute, but there you go. That's a gap candle. That candle just gapped 1%. What do we at so far? 135. 135,000. Not that many trades. Okay, I mean, it looks like we're getting this today. So again, this comes up here. I'm gonna take the. I'm gonna take it. I'll take another trade if it's gonna offer some sort of opportunity to do so. Not for the same amount that I'm in though. I'm gonna take that for the rad trade, and it's just too many percent. Not that it's percent. It's just where it is. The risk now involved of it taking time to get to the expiration again is not worth it. So transition trade. I won't take profit on it until it starts coming down though. Today, if it's gonna be today. Chris continues. I like Chris. I posted Bill last night. I like Bill. Bill's not giving us anything to right now because Chris is our one and only right now, but you know, I'll wait for Bill. Similar idea actually, which is interesting. AMC now 11%. We like it. We like the stock. Aqua Booty continuing. We took the Aqua Booty trade down here. We're really looking for upside. We're not trading to this high. We're yeah. Otherwise, you don't waste the money to go enter a silly trade. The bios are looking hot. We'll see if there's some opportunities for those. If we get some take profits this week, maybe we jump into some bios, some short-term bios. Looking pretty good this week. Nvidia continue. I mean, we are kind of spread out on semis. Yeah, I don't know what's up with these fucking values on TradingView. It's annoying. Not 1. Nvidia's 1%. UMC's break even. TSM break even. Little below. It's right in that supply. Some H really. The ETF. It's one of the better ETFs. The exposure is just kind of better. No, that's an interesting candle. You're gonna finish on a candle like that? I don't expect it to. Wonder how many people are waiting for that semiconductor bill and shit to actually go through. If there's any news trading that wants to get involved there. Hard to say. It's such a weird thing to be giving money to private, not to public companies, but not government giving money just to go support companies. Fucking Biden bucks to big corporations. Who would have thought? Very liberal of us. Oh, hey guys, here's $50 billion. There's a lot of poor people in this country, but let's give the 50 billion to the big tech companies. That'll be good. Hey, you know what? Let's just spend another $2 trillion on building new shit. That's a good idea. Got a lot of poor people, but give them $1,400, they'll be good. They'll be good. $300 a week, they're good. They'll be fine. Let's spend a few more $1 trillion on megacorps. Our companies aren't big enough. We better give them some more money. That'll show them fucking poor people. Unbelievable. Unbelievable. I mean, with that money, you could pay people like the money that they're spending right now. You could just spend you could give people, it's like the Wayne guy saying $1,000 a month. They're literally spending that money right now. You know how they said it's too much money to give everyone $1,000 a month? They're literally spending that much money right now on other shit. They could literally do it. They're like, well, we don't have enough money. You guys are literally spending the money right now on other dumb shit. So, what do you mean? I'm not gonna be able to pay for it? You guys are paying for it right now. What about the $1 trillion military budget? You guys have enough money for that? What about the 200? What about the 2 trillion bill? What about the other $2 trillion bill? What about the 500 billion that goes to subsidize farming? How about the subsidies to oil? You don't have enough money? Nah, we can't afford to feed the homeless. Poor people. Not enough money. Sorry, guys. We're too busy oppressing. We're too busy oppressing other countries and poor people. How do Uber and Lyft look? I don't have the trend line from the other chart. They're still in between these two, but I know Lyft looks better. Lyft still looks better. It's hard to find an entry on these charts. That's the hard part. Now, the thing what you can say is you can trade it between the levels. So, for instance, you know, oops. I would say they're bullish in the same sense as growth is doing well. I mean, obviously, we talked about this move over here, and there was opportunity for something here because again, you're just trading between some sort of level through the upper end of the range, and then the support down here, right? And you're coming off that with a higher lows. Now, excuse me. Now, the breakout here though is just, this is where it's hard to preempt this trade. You can say, well, I know there's some sort of break coming in here, right? For both, you know, there's some sort of break coming in here, but how explosive is that really? And is it better than others? Probably not. So it's over here, the same trade that you could have made on other charts, right? Where you have some sort of consolidation here. I mean, it's easy to see it. But this trade over here, this is a question. There's still a question here. And so, yeah, you could say, well, I'm going to trade it between support and resistance. The other growth charts is not a question of trading it to resistance, right? Where you buy it on support. You can make trades where you trade between support and resistance and trade between the levels, giving it a chance to go to the upside. The difference, though, right now is that the growth trade itself, it was not a question of trading it to a resistance. It was the question of how fast was it going to go to all-time high, right? And so everything else was just a better trade from that support. The same situation, right? See how this already broke out on last Wednesday. So I would say Uber and Lyft are behind. And so that means they're not as bullish. They're not as bullish. And I would say it's because we already talked about the fact that they're not really categorized with growth or value. They're sort of this in between. They are sort of like an intermediary service provider, and we talked about those. Sometimes they lead, and they were leading a little bit. This is not a trade I would take here, and it wasn't a trade that I want to take down here for the same. I mean, because it wasn't a growth trade to begin with, but it's also because of this idea, right? When you look at the difference between this idea and then just even the average with the Nasdaq, right? You have another question to be answered over here, and it's resistance stopping you. Might be more consolidation. Lift is a little bit better, but they're tied together, right? Same premise. It was already doing well before, but the same sort of thing. This is when you make a trade, you want to bet on more volatility. Okay, it's tightening here, but what is it? What is it going to be? It's just there's not as much direction. It's just hard to tell, right? It's hard to tell. So not a trade I want to. What I would want to take, unless this turns into some sort of breakout or that Uber chart we just saw. Same thing. It's just a little bit larger. It breaks out of this and we can see it. It's just I don't see myself taking that trade over the charts that have this idea, right? That are going to all-time high. This was too big of a gain, right? Too big of a gain. And like you said, yeah, it's definitely a long consolidation, and it's gonna need this breakout candle first on those charts, and then we can sort of see it, and maybe it'll beg the question of, is it gonna do this move that we see in front of us right now? Is it gonna make that move? We're gonna have to see, right? Definitely not the same preemptive feel to it. It doesn't have the same feel, and especially now that we see the move, you can tell the difference. You can really see the difference now when you look at some of these moves. Yeah, it's too much. Like if you that's I think right now is a really it's so easy to see everything moving, but it's really hard to be in a good position, I would say, because it's so easy that you could have been in a position that your position's going up, and so you're like, well, I'm doing well. But then as soon as you look at other tickers and you go, holy shit, there's actually a lot of big moves happening, and it's that opportunity cost that, again, you're in a position so you're not in another. I think that should be the most critical thing. So we should definitely keep asking ourselves, like, what about this ticker? So like Brian just brought up Uber and Lyft. That should be constant questioning right now. It's okay. Is this good? Does this offer an opportunity? Like, we capture this move. Can we go capture the Uber and Lyft move now if that's going to come through? Where can we start to, again, we want to be, it's not about jumping around, but it's about taking everything on the table, right? If it's not all at the same time, if it comes like in a flow way where we can go from profit to profit, take and take and take, right? As we keep moving forward. Because again, price isn't going to stop. Price will not stop. It's going to keep moving. Doesn't need to keep going straight up, that's for sure. But there's going to be something that takes its place, right? There's always money being spent. Always money being spent. And I mean, you can't just sit in a position right now and then come back in 2 months anyway. That was the true 2 months ago. It was true last year. That was true 10 years ago. That was true 13 years ago. Fuck me. Look at this candle, guys. Really makes you wonder. Really makes you wonder, where are the other people that are buying this coming from? Who are they and what are they doing? I mean, I love it, but what Netflix? What is I saw this thing at the beginning, I stopped looking at it. This is like another one. It's just kind of, this move happened here. I talked about it. We talked about it a little bit, and I liked it over here, but I can't remember what exactly. I had some indecision of taking the trade. just a lot of supply, right? It's just so much supply. But for instance, Netflix here. Here's what I'll say about Netflix, right? The same kind of idea. You either trade it from the lower end, right? So you bought it on the support, or you wait for it to break through this resistance up here, which is I mean, there's a lot of different ways to look at it. I mean, you don't want to have to wait until up there, but it's hard if you didn't already get there because now you're just like sitting on a sideways trading position. But I would definitely want that trade above there, like 100%. Hmm. Okay, so we do have a lot of charts in this bit of a. They're all kind of in this diamond formation. So that lift chart, Netflix, the Disney chart, some of these things that haven't, they're doing well. They're bullish. They're a little bit slower than the rest because they were doing better, right? So here's how I would categorize these two different things. There's the growth side that was beat up. And so that's putting a lot of points on right now. And then there's the tickers that did very well. They've been doing very well. Uber, Lyft did very well. Disney did very well. Netflix has a lot of volatility, so technically it does well. It's still a little behind, but not as behind as the average. Things like Facebook, Twitter, uh, were ahead, or excuse me, not Facebook, Twitter. Twitter was ahead, and so now it's a little bit slower. These are all sort of in the same move. I would say that it's very likely that these kind of tickers here will move together. And so we can kind of connect them. It's important to find connections. So all of these growth tickers moving together right now, right? All the mega caps moving together right now is a connected move. It's all of the growth moving together. It's connected. It's moving the average, right? But there is a subset of tickers that were doing well before and already passed the all-time high. They're above. They're doing well. They've been in a short-term consolidation recently, while the rest of tech and growth comes back while value does well, right? So there is a next move that we can see happening. A consolidation is happening. So as we come out of this move, right, at some point we're taking profit on this. I think what we'll do is we'll look from this move, at least we want to keep pushing this long term for sure. But for those short term things that you're gonna have to take profit on, right? You're gonna have to take profit on some of the short term riskier plays. That profit in those, that cash is likely gonna line up with the time that the rest is breaking out because that's how fucking things work. It's a loop, right? It's a loop. We take profit on one thing and put it into another thing. We don't really take it home. The money just keeps entering the market. Wealth is being created, right? It's not always a winner and a loser. It's really not. Again, a market maker selling you a position, they're not losing money. They're not. We're just creating. You got to remember, we're creating wealth. We're not, we're not, it's not a, you know, you're not literally killing somebody for you to be alive. More and more. Retail stores are also sort of in that phase as well, right? Retail stores did very well, and then now they're in this diamond consolidation over here, waiting for their turn. The demand is just being removed here, and so you're not staying in the position as long. It's consolidating, converging trend lines. When this happens, and if it's a big move or not, is the question, and it's not in a state where you can say, oh yeah, there's gonna be a big move here, but you can definitely see the connection between all these tickers that did very well, right? That have been doing very well. They're certainly going to be uh, coming back after some sort of continuation pattern on these. So which should be interesting. I mean, it helps if we have things in the pipeline. It certainly helps because it's a pain in the ass to go. We've gotten a little fortunate on some of this, right? We had very strong, straightforward value trades. We've now gotten growth, captured growth, and there's not like a going back factor. And we have all the tickers that were doing well no matter what anyway, that were performing well during the midst of all of this, that are going to be coming back. Equities are risk on, they'll come back. There's just demand. So as soon as demand falls out of value and growth, as just again, that's literally all there is. But from what we're looking at right now, as that demand comes off, they're gonna likely re-enter what was doing well before. But a lot. All right. TMUS is at the level here. It's not so much that we need to watch it, but just being aware of it. That let's see if this level's true. Get a reaction so far. We'll see how this goes. Stopped a bit. 1045. I mean, look at the S&P. Just continuing straight trend. Not even any sort of break. 2 red candles. And they're fake red candles. Fake. So it's been nothing but bid. Something to keep in mind is that it's 1045 and it's been a straight fucking line. Which means something. It does mean something. Nasdaq, same thing. 2 red candles. This candle still has 4 minutes on it. Those are 5-minute candles. Been a lot of candles already. Small caps still doing this price action we saw earlier. Dow. Now coming into the same sort of trend idea after, I mean, what really was a lot of bid. Curious if we get a later push on something like semiconductors here. Maybe a little bit less volume helps them. That's what I'm gonna watch here. I can foresee some take profit. The usual lunge. I expect sort of a usual lunge going into close. That sort of rounding over the top that we see all the time. I'm wondering if we're actually going to see this as this comes down off this bottom. We create this support, and you actually get a more demand come into semis. I think with so much demand going into mega caps and that side of growth, it's actually sucking up a lot of the demand that is expected to be over here. I expect it to still come. Maybe when we get into lunch, the semis come through. It's hard to tell the best way to manage those positions. That's why I'm bringing it up, because it's not really clear. Might be a good example of just don't look at the chart intraday. But what I want to know is making a decision for tomorrow here, which again we don't need to do until tonight, but is if there's another daily candle here that sells tomorrow, is that a take profit and then look to re-enter kind of situation? Because it is a little ominous that you're not getting bid here when all of growth is getting bid. It's not beating the average. And we expect this sector to be better than the average. So obviously mega caps are stealing everything. But that's why I'm saying during lunch, I would like confirmation that semiconductors are a sector that's important to the market. So that's what I want to say. Something to keep in mind. Opportunity cost. All-time high. How long is it going to take for us to get to the all-time high on the NASDAQ? This week, got about 2.25. 2.25 to go. We've done over 1.5% on the last 3 trading days. That would mean 2 days from now. 2 days Wednesday. if we kept doing it. Are we gonna keep doing it though? I mean, how long can we do that? I say we just put one big candle here up to the all-time high and then all good. What are we dicking around every day for? Why don't we just do it all at once? What the market likes. But Dawn, what about Viacom and Discovery? Well, they're certainly consolidating down here. They're consolidating. You know what it kind of looks like? It's like an upside down flag. I wish there was a name for that. Looks like an upside down flag. Hey, what is that thing called? That upside down. Maybe it's a maybe it's gonna be a flag to the upside. Someone pull that flag up. RXT did break those highs, so there's like this momentary pause here, but I think that's just the ticks not coming through because this looks like that's a 1% breakout candle right there. I mean, I think it's just the volume being low that you just don't. It's through the high, so I don't think it's taking profit on those high candles. I think it's actually through and it's just it lagged. Yeah, I think it'll keep going through there. I'm not really sure what that spread is. I mean, the spread's gonna be funky unless it's actually getting rejected at that high. It's just the spread's kind of fucked up. See what that looks like. Interested because I'm interested on something like this. Some of these new tickers, right? As they break into all-time high, you're always at a new all-time high. So it's hard to tell, but look what you get after a consolidation. You get these candles like this. That's what we're expecting is something like this here is that's how price works on these sort of new these new tickers on the exchanges. BJ coming through this high again. We've talked about this quite a bit, and this has been one of the tickers that's a little bit outside of the other. Let me switch over to the other layout because these trend lines do matter. We did take this trade. Come. Got to load 15,500 drawings. Why all at once? I have no idea. Why can't it just be when you go to the page? Honestly. Okay, PJ. Here you are. You're inside the channel, right? And so the difference with this is that you're just trading on support. We talked about the trade over here in a completely different spot, but there's so many different things they're actually happening over here. There's so much upside. You can take this trade even right here. You can actually take the trade almost even right here if you didn't take it off of anything in here. There's this sort of continued trend involved, and in your upside, however you look at the trade or this chart, you can find a different way to trade it. I would say you can find a different spot in a different reason in a different time frame, whether you're trading shorter term, longer term, and so we've seen this with a lot of different retail stores, and like you're still seeing it with things like Rad through its resistance here and coming up here, in the way that this traded through here, right? And this shit happened, and it's coming back up. Things like WBA, and again, I talked about the artificial nature of the price action. It's very artificial. We understand. I mean, I think everyone understands it, but BJ does have a little bit of a different. There is something more consistent about it. There's something more value. There's something valued about it. Not like, oh, I love BJ's. Like, we all love BJ's. I just mean that you can tell that there is that hint of artificial price action, but there's something more trendy about it. And that there is you can connect it to value in terms of defensive movement a little bit more than just this aggressive behavior. Right? Nice. I mean, I'm here all day, guys. I'm just cracking innuendos all day. Okay, cracking innuendos. Trying to give a show, you know. It's all about. There's only so much that can be said when I draw fucking 30 charts a night, right? It's kind of already been said. Already been said. Work was done. This is the performance. I haven't even had to do much today. I haven't even traded. I haven't made a trade. I'm going, oh yeah, okay, yeah, okay, cool, sweet, going. Um, make this chart. Wednesday. Looking for that all-time high by Wednesday. Say that. Here, give me one moment. coming into lunch. Lunch starts with our first back-to-back 5 minute. Is it gonna be? There it is. Boom. Can you believe it? Is that the crash or what? That's -7 basis points buy, followed by a -1 basis point. A lot. Just bought. What the heck? Exactly. Anything good to buy? It's amazing it's so amazing when you get the market just absolutely rallying out of control. Just watching price. Weird feeling. It almost feels like you should be doing something, but you don't have to do anything. That's the best part. You don't have to do anything. The work was done. That's why when it's fucking difficult, that's when we do the work. Get to watch it and freak out on every red candle and stuff. Did the heavy lifting. You know what's really hard? You entered today. I do not envy that position. You entered today. Through that. Through that. It just you're gonna be exhausted all week. You're gonna be tired. Tired last week, so I can relax this weekend. Last weekend. This week. Always always more work to be done. Looking for the next one. Right now we're picking our spots, right? Pick your landing. Different places we can land. Pick your landing. You don't want to be selling at a low. Some of you are very good at it. Don't sell it low. Holding value on a lot of these. Growth is continuing its move because it's going to continue to get those periodic long positions out. Because that's what we're doing right now. So it's not so much new positions. It's the same. It's the same orders. That's for a mega cap. That's going to be a little bit about banks, and banks have been trading flat all day. Are up. They're up. We're back to this high. Now, again, through this whole take profit here, which you can call it whatever you want, but it's not many points. Barely any points. But in terms of redness and in time, sure. Absolutely. So we understood that. But what we were doing was continuing to buy because we've been betting on banks and value this whole time. This whole move here. So a little bit of the jokes from earlier was, I say banks are hot all the time, and then Brian brings New York City Bancorp, but small cap banks, and someone else will bring up a bank, and then it's like, wait, so how do we buy that? Right? And I think, again, going with what I see in chat, I think everyone's well aware we've been buying banks since we've been buying value, right? Since November over here, we've been just trading it with value, and it's just not stopped the trend, and we just take it on every single break, right? There are pullbacks, and then we take it on the break, right? Just like over here. So we bought it back over here. The 25th, we were buying everything. We preempted this trade though multiple times. Same with energy. We're trading to the upside. XLF is always a possibility. Now, talk a lot about trading individual tickers. Banks are really easy to trade the individual ticker because they're fucking. The only difference are the small cap, which are a part of the Russell 2000. But we've talked about how it's a little bit harder to trade those right now because when you look at the Russell 2000, pretty volatile. In the average is just a little different, and it's hard to use an average here. Whereas you can just kind of XLF. Okay, here we are. And then here's Bank of America. Same damn chart. And so, but it's still better just to trade Bank of America here, right? Over the ETF. You will make significantly more money trading this easily. Just so much more risk reward involved. You're going to get paid for this. But again, you're going to just, it doesn't really make a difference. You just got to choose one. Choose one. JP Morgan is a tank. It doesn't move as quick. So if you get any sort of move on JP Morgan, you're going to make a bunch of points, right? So you're going to know your time. It's going to take longer. It's like trading the Dow and then trying to try to time the move on the Dow, right? And bet on that speed. You're going to get paid an infinite amount of money. Just absolutely get that pun. You're going to get paid a shit ton, right? It's just if it doesn't normally move because they're not growing or doing anything. If the move does happen quickly, you're going to get paid for it. And that's the big thing with banks, right? Banks are going to continue to do well because they've been doing poorly. They can only do better now. Energy, same idea. Really easy to, again, it's the same idea. We preempted this trade. Really easy to see and be like, wow, this is trending up still. Trending up still. Lows are getting higher. Local lows are getting higher. It's down today, but is it down on the trend? No. Right. No. And again, there's a lot of things with oil, but we understand that even though the demand for oil has peaked, there's never going to be more demand for oil than there was previously because we have so many new. When you think about EVs are one thing, right? EVs are going to take over the automobile market, sure, but in terms of big energy, right? Those companies are okay. They might be less reliant on oil, but they're still going to exist. So is Exxon going to go anywhere? Is Exxon not going to just fucking buy everybody? They're gonna buy everybody. That's what they're gonna do, right? So they still will be the energy provider and everything else, right? So same with all the other defensive utilities and everything. Not that they're gonna cease to exist; it's that their means of existing will change, but they'll still exist. So the price will still appreciate, right? And so there's different ways to trade these, but you can still see that this trend is intact. That's the important note here is that these trends are intact. So it's not so much that you have to trade these, it's just that you're a part of them, understanding, and taking the advantage of the opportunity when it comes. Do I want to be a part of this X1 trade right here? Not really, no. It's not moving fast enough. There's so many better opportunities. But when there is a chance like this here, this is, again, if there's the chance for that breakout, that few days of rallying, you will make a significant amount of money on by being able to bet on that. What we trade breakouts for is being able to say, oh, this is going to continue here, and you get the big gain here and get paid for it, right? Doesn't always happen, but that's what you're trading for. Solar side is down today. These were the stoppers. We're down, still consolidating. Gonna remove it from the semi supply idea. It's still part of the semiconductors, and they're still definitely in the same consolidation move. A little bit more news trading there. A bit more news and everything. I think a lot of it also is number is when you look at the number, you're like, wait a second. The clean energy bill, where's all the money for the clean? Like there's a lot of money for, I mean, we're talking about hundreds of billions of dollars, but if it's not a lot of hundreds of billions of dollars, it's not very much. Getting some travel, continue to go. NCLH, again, one of our got a lot of upside. You know, we put the weekly chart on the Lakes. That's still in play. This move here was obviously ridiculous, and that's what we try to capture the short term. We're trying to capture multiple short terms over the long term, but not scalp it all the way. 8% today. I mean, if you're in this position, I would take it. I would take it. Short terms. I'm talking about short. Defense is kind of wonky today. All over the place. All very bullish. Very bullish, but the values are a little different. The Dow is going to reach 34,000. FYI. Of that chart. So bullish. Everything is so bullish, guys. Again, if you're sitting around picking your butt, you gotta have to do. Gotta do something. I mean, you can do both of those at the same time. Back over to the Providence. Again, so we've talked about the Asia side being very bullish tech. So Hang Seng is continuing to come out of this low. We talked about that needing to happen. 2% on the Hang back here. We'll see what this looks like coming into tomorrow. So this is the candle Thursday. This week coming into this week, we'll see if this continues. We're already bet on growth that is going to continue, so we're betting the Hang Seng is also coming. Betting on tickers, those are all moving. Yada yada. South Korea has always been the side of tech that I've always been bullish on. We traded it a lot over here and a lot through the summer. South Korea handled COVID exceedingly well. Exceedingly well. Even though this came down, it came down the same amount as the rest of basically equity markets, right? But it came back extremely quickly because it's Korea is just like a whole different place, right? It's basically America with their culture, but they do everything a little bit better. In most senses, they do things better. Literally, they're just more modern, and their companies are more modern. They get priced because of that. This price action here isn't like a fluke. They're getting priced for what they fucking do and the way they drive through these different things. So again, we're betting on growth here. The reason I added this chart, I mean, we should have basically already been thinking about it, but it's important to be able to see this here now. Now this is pretty conservative, but I'll show the move point. It's important to note of how far this can go beyond here. It's really hard to think of the different the different ETFs of different countries' equity markets, so that we can get exposure to equity markets, whether it's like emerging market, big market like South Korea, one of the biggest economies, right? The idea here to remember is that this this price here, just like what we saw, we saw Apple double from COVID. It doubled. It went from $1 trillion to $2 trillion during COVID. It doubled in value. This here, it's hard to think about it. This has doubled. This doubled during since over here, right? Since November, it's doubled in value. It can double again in the next few months. It's really hard to think that. I mean, it's really weird to think about it, but a whole country's equity market could double in a few months. It's really hard to think, but that's what happened. That's what's happening in our market, and it's hard to sort of I don't know, to put it into perspective. But a lot of these tickers that we're a part of have doubled value multiple times since COVID. Like have just doubled value and like quadrupled value. Tesla, what is up? How many times over? Right? These different things. Nothing's really changing. Right? Nothing's. They're not. They're not really doing anything different. Except Korea does two things a little bit more. So it's important on the Asia side to remember that Asia can outgrow America because it's just, especially like Korea. Korea is just smaller, but they're developing a lot faster than we are because they are small. Not to say they're not one of the largest economies in the world, but just you know what I'm saying on the tech side. And so it doesn't feel as bad if this doubles. It feels bad if the S&P doubles, and you're like, what the how did that happen? Because it's now you're betting on all these companies doing that. You're not betting on that many. You're betting on the top of the line sort of companies to be doing better. And so there is something fundamental about the idea of betting on Asia, and it's again that's why we're betting on China as well. You can't. I've talked about India as well. India would be the emerging market that I would put money on. That's my exposure for India. Brazil is kind of blah, right? South Korea don't really consider that biggest economy, one of the biggest. But getting exposure to these kind of things, this is where like you take your long term trading to a different level. Like those of you that you get 100K sitting around, you want to go put it somewhere, go put it on these ETFs for countries, buy shares, buy long term contracts, and go bet on these. That's the risk involved is low, and there's potential there that you can't get on, and that doesn't react to our markets. Right? These the other countries don't. They react to the same macro events. They don't get exposed to the short term volatility that our market gets to. For instance, like this violent move here. Yes, the same idea happened to Asia, but it's not as violent. It is better on the long term. Better. Jimmy coming back, erasing that loss. What to make of it? I mean, there's nothing else. It's priced in. Guess what? It need to again. It's hard to tell on the end. It's impossible. Impossible. So the the offering thing is why I talked about the whole time that it's it's insane to me that they waited until this last earnings call to even just bring up that they're thinking about doing an offering, and then they come out and say they're going to do $1 billion offering, which was like the maximum to do. But they can do more than $1 billion, but that's how much they had registered already. They can register for more offers. Why they didn't already do that? Look at it's barely moved. It barely budged. It's still up over 1,000%. It barely budged. Why would it's just insane? Terrible, man. Just do the offerings. Dilute this goddamn thing to zero. You know what? Split it, and do an offering, or do an offering and then split it, and no one will know the difference. No one will know. They'll have no clue. I would be. You know what I would do? I would do. They did this 1 billion. They can go register for more, They can probably register for their cap side, so they can probably register 3-4 billion for the next one. Do it again. It's just, I don't understand. It's just not enough money. Not enough money. I need more. It's just, you went from 0 to 100 real quick, and you got to take advantage. AMC is genius. AMC offering. They were doing offerings and still going up. This is a 300% candle. You're doing offerings the whole time. Give us some more money. Give us more. And it's in a better spot than GME is. And it's actually a long-term chart now. Someone like me that's objective can still be like, well, this is a good long-term trade. You know, blow right through this level and keep going. It doesn't even matter. I find it fishy. RXC is gone. So we did get that. Again, it's just the ticks are a little weird on that chart. The low volatility ones are a little wonky. It's hard to look at the chart today. And then it's so obvious when you see the daily, but then you know during the day it's REITs have kind of slowed down, but I posted the SPG chart. Saw that the REITs have kind of slowed down from this consolidation, but I am expecting them to come back now. It's so hard to read the moves on REITs because they're so defensive. They don't really move quick, and you can't really see when it gets going because it's not the same for investors when they're buying. It's actually it is a little different. They're not it's not like this, we're gonna go put we want to get this many shares over this amount of time. Or that's what they're doing. They're not like, oh, let's go buy this and trying to buy it now. There's an understanding that it's not going to move very quick. So the orders will be spread out. I would say right now, the reason why I posted this chart and why REITs would come back again now, they're doing very well, right? This whole move here with all the value, this was one of the biggest sectors. This was the biggest sector alongside banks that we were a part of. You could specifically see it on the small cap side. And we traded REITs this whole time, but then it started consolidating. I would say right now, what's so important to remember right now, and it's so easy to get lost in everything that we've been, is that this whole spending bill, yes, there are direct payments, government sort of contracts that are going to go to infrastructure and all that, but the most direct beneficiary of all of the spending for that spending bill, the new one that's coming out, are REITs. The real estate and land in which that shit's going to happen. These big holding companies, it's really important to remember that these REITs, they basically provide a bulk, not, I don't want to say service, but they own the land, the buildings, but they provide the holding company, the service, actually do a lot of these things, and they're really the ones that directly receive money. They're the ones that directly receive it. In terms of cash going onto a book, REITs are the ones that are going to get cash directly on the book from them. It's going to be new leasing, everything else. I know we don't usually talk too fundamental, but that's something that even being a technical trader, you have to be aware of how this flow is going to work. That flow is an important and sort of an integral part of the whole spending that's going to happen. Where's the fucking money going? It's going to the real estate. That's how all of it works. That's how this country works. This country's not about, it's not about, I don't know, no one cares about the money that, I mean, people care about the profit, but it's not so much that, it's about just, hey, how much is that worth? How much is that building worth? How much is that land worth? And everyone just does real estate. It's like the McDonald's being the famous example of, it's not about the McDonald's and the money the McDonald's makes. It's about the land and real estate that the McDonald's fucking owns. That all of those, that they got all that. Starbucks, Dunkin' Donuts. It's really not about the coffee. It's really about the goddamn land and the franchising that goes on. REITs That's what they are. That's the whole thing they are. They gain value from the appreciation of that land, those buildings, leasing deals. They're not like continuous revenue machines. That's not really their purpose. So when something like this happens, the fact that this hasn't moved that much yet, I mean, like all of these, right? It's think about the whole thing that's going on. The economy's reopening, reinflation. These don't grow, but they're going to artificially grow. Where's the price should be showing this speculation, but it hasn't really started yet. And so that's what makes these trades a little bit better. I think there's still some uncertainty, but now with the build and everything, I mean, there shouldn't be. It'll start to come. The demand just isn't. The demand has somewhere else to be, but they are trades to be a part of. There's a ton of different regions. Keep them in mind because they are nice trades. They really are nice. They're defensive. You can just put a lot of points in there, a lot of cash in. Hey guys, Google's up over 3.5%, and continues going. Want to call somebody? I don't want to call anybody. Transportation still looks. Yeah, we talked a lot about transportation the last couple weeks, few weeks. FedEx, yes, being the big names in there. UPS moving a lot. I mean, doing so poorly, but we finally started getting those transportation moves. Very bullish. There should be an expectation of all get back into some sort of trend. There's certainly, again, follow the money. Where is all again? $1 trillion is it's so much money. We're spending $2 trillion to build shit and do shit. Who's gonna be a direct benefit? Who is gonna get cash directly from that? Not like just some weird future thing that might be. Transportation companies and the ones that have to move all this shit and do this shit are the ones that directly get cash affected. It's again, it's all of that flow. Again, you just have to. It it's such a hard thing to understand that money flows into the equity price. It honestly does, and it's not like some weird fundamental thing. It'll take 9 months to see it on Earth. It'll take 9 months, 9 months, 3 quarters. It's going to take 3 quarters to see from the day these companies receive the money to go see it. Right, and literally take that long for it to actually affect the price. But there's again, it's not that. That's not the point that matters. That's not how we trade. We trade right now, speculating and understanding. We'll probably sell it once we see it on the book. Wait, did this guy bet on the Dow Jones Industrial Average a month ago because of a fucking spending bill that came out last week? It came back down to the left. Are we about to? That looks like a really nice test. Tested wide, tightening, launch. See ya. See ya. I can't see ya. See ya. Good. Give the meme or something to do. Give the meme or something to do. Launch off 11. Already get 18% today. It is a good long term trade. There's certainly, I would say, it's way more institutions own AMC than GME. comparatively to retail. This is all institutional. This price is way too, just doesn't get, it's all. They all know. They all know. Oh, yeah. Worst case scenario, AMC owns a bunch of land and buildings. Right? Worst case scenario. Movies don't ever open up. COVID goes on forever. Well, guess what? They sort of own a lot of stuff. Just like the GME thing that people forget about. It's about their online gaming. That's what it's about. That they made $5 on. Made $5 profit. That's pretty good. Pretty good, Mikey. Right, the intermediaries on the EV and clean energy side is definitely coming back up. See how that does during. I predicted that with semiconductor that semis will do a little bit better during lunch. We'll see if that is also true for some of those intermediary clean energy side of things. Maybe solar better as well during lunch as demand comes away. eBay's still doing very well. I talked about this a lot the last couple weeks. This kind of move, it's so sneaky. Right? It's so sneaky. But it's important to remember we've been talking about squaring PayPal and some of these things, but these have been consolidating. And there's been sort of this the flow is going somewhere. PayPal flow is going somewhere. Etsy flow's going somewhere. Someone's buying. Hey, is getting that. Why? I don't know. But it is, and it's going to the all-time highs. Yeah, I would say it's probably an important thing to note because that's certainly a flow kind of problem. When you get a chance, could you explain this spreads on Grub? Grub is an interesting. It's just the way it gets traded. So again, there's two kind of charts. You get charts that are now the whole market. Let me preface the whole market and about I don't remember the whole number, but the number is almost 90%. 90% of all price action comes from pre-market and after right, of actual price movement from open to close. So most of the points are actually not made during intraday. You can get price movement, and you're going to get bodies of candles being large, and they will fill price. But still, you know that most of the price action comes from pre-market after hours on an average. There are charts that show that idea more than others. Grub would be an example of one that most of the action is not intraday. You can actually see that a lot of it is actually it's spread out, right? And you get these doji candles around. Another example would be something Deutsche Bank's a famous example. This very spread out price action. It's it's not so much connected because most of the action doesn't come intraday. Now, why is it like that? It's because of the way it's traded. Why do institutions always trade at the very open and then the very close? Why is all the volume primarily times, right? It's something that just over time ends up being the case. And that's how things are traded. Why do these candles happen like this? Because Grub just has been traded that way and it continues to get traded that way. Sometimes it changes, but this is again, there's charts all over the place that you'll see that are like that. This is why. Now, I would say there's another reason why Grub trades like this. And so, in terms of your question about the spread will be wider because of that, because there's not intraday trading. There's not as much intraday. So you can see that there's almost a million average volume for shares traded in a day, which is good. It's over a million, right? It's a big company, pretty high price. And so there's plenty being traded, but no one's trading it intraday, right? No one's trading intraday, so the spread is really wide. See all this shit? That's because no one's trading it intraday, and there's no market makers. There's no market makers trading the shit intraday. They're not out there to fill liquidity. Why? Because institutions are not trying to place their orders intraday. On different companies, there's institutions that are putting periodic, every 20, 30 minutes, they're putting a trade on, right? To fill up a position. And so a market maker is there to fill liquidity. This is an example of a chart that does not have that. Close, 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 open. That's it. If there's orders going through, it's not during intraday. So spreads are going to be wide. So especially right now when you're looking, right now it's going into lunch, lower volume already. Nothing's going to happen on that chart during lunch. Barely anything happens at open and close because most of the action is not when the market's up. There's charts that are like that, and the more that it happens, the more likely it'll continue. Some of those charts that you see are just dojied around. They're going to have terrible spreads all day because, again, no one's filling it, and so no one needs to be there. If it's only you and I that want to go buy something at 11:30, then there's going to be no market maker there to fill us, right? There's somebody there, but it's not going to be a great spread, and so why would a market maker even be involved on a ticker if it's like that? Because they're going to profit off the spread, right? And so they also have a reason why. If they provide more liquidity, you know what's going to happen? They're going to make less money on the spread. And so the wider the spread, the more money they make. So there is a reason why. Say right now. 63.71 and 63.89. So you have a pretty wide spread, right? You have a pretty wide spread. So that's money being made. That's money being made by market makers. But again, it's really due to, again, I don't want to say pattern, but this is the way things are. Rated open, close. Until things, for some reason, they need to change that. That's one of those charts that are like that. Not that it doesn't have volume, right? It's one of those weird things. It's not that it doesn't have volume. Not that. It doesn't have liquidity. But there'll always be a buy. The funny thing is, there'll always be a buyer there. If you go look, bet you $100. I haven't looked at it. Bet you $100. There's plenty of bid out there. So if someone needed to sell, there's plenty of liquidity to sell into. Yeah, buyers. Market makers will fill you on anything you need to buy. It's just the sell side. Because that's the side that you can actually change. You'll make someone pay more for it. That's the whole point. That's the spread. They'll make you pay more for it. You have to pay over the market price. That's how it works. That's just how those work. That's how Deutsche works. That's why there's barely any price movement. And then that obviously there's things that will happen to the options. The same thing. It's wider and it just becomes more and more of the same on the option side, just larger liquidity. But same idea. Exact same. Trickles down. It is going to be an interesting lunch. It's definitely going to be an interesting lunch because we want to see. I mean, first of all, how do these mega caps continue? We're still getting orders put in, long orders. So mega caps continue to push. I mean, this is everything we bet on, guys. Everything we bet on, and we're getting everything that we wanted. So again, there's certainly everyone thinking the same thing, and certainly institutions are still putting lunch. During lunch going to be really interesting. Take profit close is certainly on the agenda. So keep that in mind for those of you that are in short term that are looking good right now. There's going to be some sort of opportunity to take that profit before you're going to close. You don't need to know the exact high. You just need to know the rhythm of the market. See, here you trade on this level on this for. It's hard, when mega caps suck up everything, it's hard to tell what's going to happen in the rest of the market. Mega caps are sucking everything, taking everything. Everyone's providing liquidity to mega caps right now. So they're just not much is going to happen on other tickers, which is why you don't see things. You do not see those smaller tickers putting as many points on, only because there's no one to fucking buy it, or no one's really selling it because they're all over on the mega cap side. Too much going on these. And this stuff happens though. I mean, it usually has some sort of reaction. There's some sort of reaction tickers that comes from this kind of price action. Most of them already led. Obviously, we already saw most of those. Good example, software company. They're smaller, and they moved already. They broke out. They're way past. They're already past all-time high. So those are going to take profit as this comes and puts points. Look at the low end. We already talked about solar and stuff. Might be some good examples of. Okay, there are some good examples. Some of these small companies that are taking profit because mega caps are getting all the demand. PH. There are even Etsy, WK, Open, Ebon, Plug, for instance. Plug's a really good example. Plug's a really good example. Blink's a good example of these charts that are. Did something change from the trend here? No, obviously it's still in a consolidation and we're ramping the move. This is just demand going to mega cap. Dealing with this is not easy. There's not a good way to deal with the situation because Chewy, WKHS, W. You know that what's happening here, that mega cap are taking everything. They just take because it hasn't happened in a while. Difficult. That's not. I mean, it's just not easy. You just have to again make a decision based on your rules, and if you get stopped out or if you have to take profit off a reversal move, then you just do it. That's where you have to get exposure to everything. You just have to get exposure to everything. God, that's just. I mean, it's one thing to be like, yeah, these things are risk on, and I bet growth will go back. This is just, I mean, come on. I mean, could put more money on Google, huh? I just hate trading Google. It sucks. You buy like 2 contracts and you feel bad. You just feel bad. Now it's like, damn, wish I bought more contract. Damn, feel dumb. I mean that's I would say with that, I mean there should be no question of how many points are gonna be. Nasdaq's all-time high soon. There's institutions that are willing to buy this shit up here and not buy the things that are still below. Think about that. Okay, here's a good example. See the Google chart right now? How high it is up here past the all-time high. Here's December, February, and then you're putting this much money. Go take a look at the Apple chart. Here's the beginning of the year. Here's December, and it's still below. It's so far away. Guess what? People are putting money. Institutions are putting big fucking long positions on Google at its all-time high over this year, but they're also putting it on here. It just, again, there's just no one's. This would be way less risky, right? There's so much less risk involved to buying this down here to trade it to retrace it, right? So putting the money here is less risky than putting it on Google. There's so much confidence that equities are going to be risk on that they're putting it here. Even they're just buying all of the mega caps. Everyone is. No worries. Microsoft all time high, right? Put it on. Facebook all time high. No worries. Facebook, everyone loves Facebook. All time high, right? Everyone's putting everything on. We're at all time high, folks. Nasdaq is not at all time high yet, but it's pretty damn close. In almost all of the companies that are not mega caps, been all time for a while. We talked about that phenomenon of mega caps being really far behind, but the Nasdaq companies were trading all time high, but the average was down because of megas. Fine, no one cares. Tesla's still slower. Apple's still slower. It's really just Tesla and Apple. That's it. That are stuck down here. That's holding. Apple and Tesla are literally holding this below all-time high. Otherwise, everything else is above. There's almost nothing else in the Nasdaq not above that previous all-time high. Nothing. At least from the new year. Or especially from. That's just so much so risky. This is where you get really into the leverage tickers. So when I posted all these tickers like SPXL and UPRO, right? These tickers, these leverage tickers, this is where you make the money on those averages, where you have a hard time capturing individual companies because they're just kind of are wonky. I mean, it's hard to look at Google. Like I said, I can't go buy Google where it was and then to wait for the break and take a break. But this kind of shit here with the leverage tickers will work. QLD, for instance. This is 3.5. This is 3.5. Right? You're talking about a larger percent and a lot more on the equities. All you're doing is betting on speed and direct. You're going to get paid more for the same move, but just more points because there's more points involved. This is where you use leverage beyond just like your own margin account and putting leverage on. You use leverage ETFs for the individual companies, but again, there's times when you do want exposure to all. Right now is an okay time. That's why I posted all of them. I would say these are important because I posted these pretty early comparatively. Posted them back on the 25th and 26th when we were buying. That's when we talked about this sideways trading move was really good though, because all the companies are still going up. It's really easy to be like 5% traded flat and betting on the big move. Pretty damn bullish. NLOK is through those resistance today. A lot of resistance here, all converging. That kind of chart moving. Software company. Still turning down. That's the important note. Still turning. Came down, tested, still turned. Yeah. Yeah. 23.5. Hmm. So funny how the market. I mean, we talked about the idea of betting back here that the market would not react poorly to yields anymore and just accept the fact that that's how things are going to be. The economy's going to be better, yields up, inflation up. It's so funny how quick the market price that because the last couple weeks, few weeks, getting violent moves in reaction to God yields are going up, and then all of a sudden, the flick of a switch, no one reacts to it. Yields are up, no one, right? So funny how we're so easy to change our mind, right? Just like when we're able to get anxious for no reason. So human, even though it's all algos. The algos trained by a bunch of chimp brains. Might be able to think faster and process more information, but guess what? A chimp brain still made that program. So it doesn't make a difference. Train like a chimp. Synthetic monk. Uh, One thing to note is I posted the NG chart. I've obviously posted a few other gold charts. I've talked a lot about the super cycle idea. Gold has been beat to shit. Talked about silver a little bit. Silver is gonna move a little bit quicker than gold, most likely this next time, comparatively. Sort of a couple bets. The timing is not. Timing is not. Don't really know the timing. And the dollar's still going up, so it's still losing value because now the dollar's climbing, right? But the expectation still should be that commodities are going to be rising. The dollar's going to be. Now is a good time to again think about the low end of the range here. To think about there is, it's hard to look at this in the same way, but think about the growth charts that coming down into this and created support down here. This double bottom idea coming from a downtrend. A very different chart and a very different idea. But the chart is still the same. Important to remember that, okay, completely different idea. An equity. This is a commodity. But the way price changes, supply and demand is the same. So this is all supply and demand. Really important to remember. Same reason why this would break out. It's the same reason why growth is breaking out. Same reason. So even though there might be a different underlying cause why the supply and demand changing, still going to cause price to go up. What that, especially since we're entering a cycle. Listen, it hasn't broken any of these times. Can't take the trade until it's into that sort of reason. But for a chart perspective, a technical trading perspective, you can take that trade. Take that trade coming out of this break. Whether it's going to break out all the way or not. Good. It hasn't. Oh, really don't know. Bitcoin, cryptos are a $1 trillion market now. This is certainly taking some of the. Look at that shit going. Certainly taking some of the demand. Getting really tight. Ready for a move. Another move. Maybe to 100,000. So, but I would still keep that commodity the back burner. So all of you orange juice future traders and corn traders and lumber traders, lumber especially, home builders, gotta build something. You need wood to build shit. Steel, need steel to build. Right? And you gotta drink the orange juice, vitamin C. They continue. Good confirmation. Good confirmation. Get this bid in here. Good. Wasn't sure. Started talking about it for it to break through that high, even during lunch. Monday. 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 Again, the tone of everything, a bit more tonal again today, just like sort of going through a confirmation phase and just kind of riding the trend now. So there's not like point out opportunity. Everything's an opportunity, but since everything is just the same, or watching things trend, you gotta remember that there's not more to be said or done. Things are the way they are. That we can do. Of course, no, we're price watchers. We're literally price watchers. We're either trading or price watching. We're only price watching if we're in position. We know, you should know your spots. If you don't know your spots, I would take a look here during lunch. already know, no, but find out where your sort of your areas are and where you would need to take profit. Made a lot of today. You're up a lot on the paper. Make that real. Make it real, but understand that these prices are still increasing rapidly because we are going a lot further than where we are now. And this is where you got to be able to push your winnings. You might get a take profit. You're gonna get a take profit day. You're probably gonna get a take profit day. Just like you could take profit today on some other things that you guys are going, oh shit, why is this down? Why is solar down today if the whole market's up? That type of shit's gonna happen. So figure out where that point value is that you would get out of that position, or you can just get out now and transition. Figure those things out. But otherwise, there's not really another way to talk about. This is what things are. This is what everything that we prepared for, everything that we bought for. It feels really good, right? To be able to buy 2 weeks ago, really early, to be wrong a couple times during, but still now be correct. That's what we do it for. Another Monday, and we push things over the weekend. We weren't. 2021 was about not being a pussy. Here we are. It was worth it. We get confirmation. It didn't need to happen, but we get confirmation. That's what matters. Enjoy it. Celebrate those trades if you made them. If you didn't make the trades, learn from it. Important part. Again, that's the important part. It's not the money. It's the learning that, okay, we did that right. Okay, we did that right. It's always changing. Not like 80-year-old Greg was value investing 60 years ago and use the same things now. No, you have to change every single day. Adapting every day. New problems every day. That in mind. It's going to, just as quickly as we see this, something else is going to. Enjoy your lunch, guys. This was fun. This was a lot of fun. I had a lot of fun with the charts weekend. The list before that as well. Obviously, I posted a lot of charts. But they're a lot of fun. I think there's a lot to learn there. But yeah, so I'm enjoying this, enjoying today so far again. For sure, I will see you in this afternoon. Again, should be some take profit. Be some take profit. Be interested how much if we continue and break that. So enjoy your lunch, drink some water, get some exercise. I'll see you this afternoon.